What's going on, everybody? My name is Jeremy Scott. We're going to do a quick little investing opportunities breakdown. This is 4 slides, technically 3 because the fourth one just has pictures on it. We're just going to do real quick. So the note meetup, what we always do, that's live. It's once a month. And we'll kind of go more general. This is a little more nuts and bolts. How can you get started today? How can you get investing? So let's go ahead and get started. We offer virtually 6 different ways, if you will. But our lending avenues partner with our hard money company, Oakmont Wealth Lending. On our regular flips, we've been doing that for quite a while. It's just a standard 10% APR. You can also get PNC, Wells Fargo, 4% money market, which is great, but this is 10% with your money fixed and secured. It accrues interest and it's paid back at the end of the sale. We get them at discount, so your loan to value is really, really good, and you're in a position where your loan to value is safe because the asset is worth more than you've lent on. In the situation, the person would default, more than likely a death, because there's too much equity to lose. That's ideally how you want your money to be, because the opposite, if you lent 200 grand and the property is worth 150 grand, then obviously your loan to value is not good. It's negative, which you do not want. So just a little financial example down here: 200,000 times 10% is 20,000 on an annual basis. Divide that by 365, you get your per diem of $54.79. So if your money is lent out for 3 to 6 months, you can do the math: 90 days, 180 days, and you'll see how that goes. Also, something we really recently opened up to is an asset-based lending line of credit type situation. We do a lot of flips, but they're not always ready to 100% just say, hey, I'm ready to go right now. So we have people interested in kind of parking their money with a lien, attached to the business asset. That way, all the equity we have, your money's protected and whatnot. That way, we're ready to pounce whenever we find the right one. So we would transfer that lien over to the property, but to earn the 10% at the same time while keeping your money invested, protected by a company that has a lot of equity in multiple assets, if that makes sense. So we can definitely have more conversation about that. Those are quarterly payments when they're out, and everybody just likes their own thing. Some people like just doing that, not thinking about it. Others like having the individual properties. It's whatever works for you guys, but it's the same payout in either way. The line of credit we can get moving literally today. The flips, we wait till the right property comes around. Here's something else: wrap loans. So we will use kind of hard money for short term. Wrap loans are more if people are interested in long term, over 365 days for sure. This is more amortization. So you'll see down here in our example, 5% interest. Doesn't sound like a ton, but we're talking amortization. And if you understand how that works in long term, there's a reason why the banks do it, because you get all your interest up front. So 200,000 amortized at 5% interest for 360 months. That total payout ends up being almost $400,000. You can see down here, $386,510. So if you're interested in that type of style, that's a really, really quiet business, if you will. You lend it out, and you just get that's actually paid out every month too. So that's an option. It's more long term and it's paid out monthly. Same with performing notes. It's long term and paid out monthly. So this wrap loan type situation would be: we have a property that we did a seller finance loan on it, so you're protected by a very, very high interest rate situation and good piece of real estate to protect it. Same with the performing notes. That's just buying one that's kind of already existing, and you would own that whole thing and deal directly with the person making the payments, as opposed to just dealing with Summit Code Realty making payments. So that is an option as well, and would be very, very happy to help you guys find some. And we've helped a lot of people buy those. Those range anywhere from 15 grand up to $250,000 performing notes. And those range anywhere from all the way up to 9%. Now you can technically get a 0% interest loan and have it yield double digits. We're not going to get into that today, but don't let stuff like that deter you, because if you buy the right amount of debt, let's say it's 100 grand at 0%, but you buy it for a cheaper price than 100 grand, your yield is way more than that. And that's what we're looking for on that. So that's it. Short and sweet, like I said. we continue to get people reaching out. So those are some ways to get involved. Hit me up. Would love to discuss with you guys, and probably should put that on there. But my information, I'll put it on right here. Oops. If you have lending questions, please reach out. I met with somebody last week. They're interested in lending a few $100,000. That's a good way to call me, text me, leave me a voicemail if it goes straight to voicemail. But look forward to hearing from you guys soon. Take care.